The following is a presentation of TFNN. The Power Trading Hour with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome all to another exciting edition of the Power Trading Hour with me, your humble, lovable, squeezably soft host. And once more into the breach, dear friends, do we go. Anyway, it's going to be a less than stellarly exciting day. We pretty much had all that yesterday in my daily newsletter. I was predicting a rather flat market, and we got up to 2030, 5 points higher. We're down 2 points now. Volume is light at 2.14 billion shares compared to yesterday, where I think we started off around 2.4, 2.5. But this is a fairly standard example of the pattern for expiration. That is, normally you are higher than the week before Wednesday. Normally you are higher than the low on Wednesday of that week. There is a bullish bias, and I have a feeling it has to do with a variety of things, but mostly a lot of people have options and put options. And normally, as they cover those, the market will absorb them, and the hedges will be taken off. And that gives almost always, 80% of the time, a bullish bias into this Friday, as we see today. Now, something that's probably changed over the last 2 or 3 years was the bias into a very volatile Friday. And almost now, it's always Wednesday, Thursday, and by Friday, whatever they do by hook or crook, there is artificially low volatility on those Fridays. Now, every once in a while, maybe a couple times a year, you get a little volatility on Friday. But if you went back over the 10 years previous to 2012, you would have seen that every Friday was statistically significantly more volatile than any other day. So once a day a month, if you looked at the volatility compared to all the other days in the last 20 years, you would have seen it just stand out like a sore thumb. And that's why Excel and your correlation function, and it is so important. It tells you the difference between something that's anecdotal and something that is provable scientifically. But you should have some idea of why. Now, I'm not exactly sure why it has changed, but it has. And that is now that if you see a real volatile Thursday, look for a very quiet Friday going into monthly expiration. And, off 2.5 points, I'm going to call that statistically flat. It's 0.1%. You may have a little bit of movement out here, and we'll talk about that again, but it's not something that is very different. But I'm not expecting a lot of movement before the end of the day or a lot of selling going into it. We have a market that is priced for perfection, and even without perfection, the market continues to go up. I suspect that is because of a lot of planted stories and other things going on in the market. We'll get into those today. But I kind of always like The Godfather, where Michael's talking to, this is in the first movie, where he's talking to his brother and some other people, and they're talking about, why can't we kill a cop? And he says, we've got some people on the payroll down there at the newspaper, don't we? They might like a good story of a cop getting caught up in drugs and got what was coming to him. Maybe they'll write it with an article like that. And I think we kind of got one of those in the last day or two. I don't know if they were on the payroll, why there was such a reason to make sure that this article got out. And we'll talk about that in a few minutes. But flat market off 2 points, not a lot of volume. If I was expecting maybe some kind of big selling before the end of the day, I would have seen a lot more volume. I suspect previous to now, again, we're probably looking at closing, up or down 3 or 4 or 5 points, and nothing to write home about today. What you should be doing, in my opinion, is getting ready for next week. It will be a Super Bowl of earnings, and somebody in the den said, I don't know if they're talking about the next 5 minutes or next 5 days, but they were talking about the potential for trapdoor selling. And what we do have is a market that was incredibly and had a ton of people incredibly short. And through hook or crook or true market action, the market has gone back up. Most of those people, I suspect, have covered. They got a bloody nose. They don't like the market now. They're mad at it. Everything said the market was going down. It went up. And guess what? If the market goes down now, there are not going to be that many people to be natural buyers on the way down. And that's exactly what got us into the huge, fast move last time. Everybody thought, including me, that the market was going to go low volume and that would be it. Most people covered their shorts because that's what happens every year. And guess what? China dropped the chalupa, and that's all she wrote. Now, it took a little while for them to get back up here. But if you look at patterns over the last 100 years in the stock market of major tops and major bottoms, the retest of the previous high happens about 85% of the time. Sometimes the market just falls apart and that's it. But most times, unless you're talking about the end of the world kind of stuff, you get at least close or you get back up. Let me put it this way. You get an opportunity to sell. And if you don't take it at that point or see the kind of action that makes you think that, okay, that was just a dip, that should have been bought. Now, at this point, are you sure? Is there compelling evidence? Do you have an abiding belief that the market is going much higher? And the answer for me is no. In fact, I would kind of think that that trapdoor selling is available to the market. I don't think it's today. But I think certainly as we get into earnings next week, where we have a ton of them, and they look like they may even come in a lot worse than the ones that we've had come in this week. We'll talk about some of those stocks today. But in the meantime, it's a time to get this party started.
That it's all just a little bit of history repeating.
On this day in 1833, the New York Stock Exchange hikes its initiation fee for new members up to $150, or more than $3,100 in today's money. I think they're selling, are they still selling for millions of dollars a seat? I think that's probably somewhere close to being true. But it is a interesting day, kind of quiet in the history department. I thought it was kind of a good indication of what you could do, 150 years ago? More? 170? 180? Things that I wanted to get into, and that's where I was talking kind of in the lead-in of this market, and that is the Theranos news. It's not uncommon to see magazines or newspapers like Barron's or Wall Street Journal do articles on folks. Normally, it's Barron's that does a hit piece over the weekend. To see the Wall Street Journal do a hit piece on a private company is somewhat different. They also rushed this thing out to make sure that it came out yesterday. I suspect that a huge amount of the movement that we saw in the IBB had to do with this Theranos news. If you're not familiar with it, this is the company that's run by a pretty nice and lovely lady. I think it's in Arizona. But she came up with some ways to test blood without taking huge amounts of it. I think it's you just kind of like put your finger on these and it does a bunch of tests. Now, why you would go after and do such a savage attack on a private company is rather interesting, especially if you're geared toward public companies, unless you think about, hey, maybe somebody would like a big story out there. Maybe why does it have to come out Wednesday or Thursday? They asked for comments. She said she would be back by Thursday to give comments. No, we got to get the article. We got to get the story out. We got to get it out, which is kind of weird for the Wall Street Journal because there was nothing pressing on this. There were no additional investors to be had. Nothing else. They could have taken their time getting this article out, trashing this company. And she came on TV last night and talked about what had happened and what was out there. And I do have to think that, you see this lady and she's well-spoken and you think, that's it. She should be able to do a better presentation than she did, but she's not. She's an egghead from the Egghead Academies out there in Boston. What was it? One of the biggest Boston biotech schools. I forget which one it was. She just didn't do a good job. He asked, the interviewer asked her yes or no questions, and she goes off on some kind of tangent. She should have just said yes or no, or there's the reason why. But if you actually pieced through what she said, you figured out there were some fairly good reasons for what they're doing. But the idea that you go after some kind of private company that, as far as I can tell, has done nobody any injury. They're all private. They know what's going on inside the company, I would suspect, is very suspect, especially on a day like yesterday. And I always wonder if there isn't somebody like Michael going, you know what? Wouldn't it be a horrible thing if someone wrote a piece on a company that it's severely going to put a hitch in the wagon of the rest of the biotech companies that are already public, and maybe it has to come out on Wednesdays or Thursdays, and it just has to come out now. I always wondered how close the Wall Street Journal was with some of these things, and maybe traders, and whether or not there weren't nice gold Rolex watches coming out. Can't prove, don't know, but it happens at specific times. And when you see a story like this that gets rushed to press, I always wonder too. Is it going to change the trajectory of this company? More people looking at it, it's fine. They haven't filed any of their paperwork to go public. They're not looking at going public in the near future. Is it much more likely that a lot of people that had power said, they're trying to sell us off, saying that this company is going to come up with a bunch of tests that are $1,000 and they're going to do it for $3? How can we let these folks do that? Maybe is there the truth in there? Is there a little bit of truth? I don't know. But it smells to me, especially in that. Now, we made some good money on it. So I am not going to give it back on our options positions on the IBB. I don't know if I saw already what they were planning. Maybe it was an operation. The operators on Wall Street, stock operators, are old as the market itself. But sometimes you're lucky. Sometimes you're good. Sometimes you can see in the charts things setting up. I think maybe we got a little bit more movement than most people thought. I was looking for 310 or better on it. We got to, 318 or something on the IBB. We'll be back in a minute. Give me a call at 877-927-6648.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crisp crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
I have a question at the end. Is there much more to this story than that? And the board of directors and everybody involved in this thing are pretty massive. I have a feeling that she knows that there's going to be a lot of problems when she goes to the FDA. There's nothing so political as medicine in these days and times, getting a lot of that stuff through. So the board is the best and the brightest, probably to get them in and past a great deal of resistance. The biotech companies do throw a lot of cash around. I thought one of the funniest things in the debate Wednesday night was they asked a question of who's your biggest enemy, and the person on the stage that got a literally massive amount of money from the biotech companies said, I wear the disdain of those companies as a badge of honor. And of course, I think of the four on the stage, that person got, I don't know, 30 times more money than anybody else from the biotechs. It's all rather seedy and unseemly, if you ask me. But there is a lot of money being thrown around, and everybody wants to think the FDA is totally apolitical. But I think when it comes to tests like this for diseases, you know, one company gets it, another one doesn't. There's a lot of money being pushed around, and that's not just to be nice guys. And all that money sloshing around on K Street is for a reason. I think the reason why the best money we can buy But I think I don't know if there's a lot more to do with a story other than the fact that there are a lot of people with a lot of money, and they wouldn't have as much money if everything works out for Theros. And the big deal is you don't have to take lots of blood. You can just hit it, and the tests pretty much go through quickly and automatically. And the CEO was talking about some tests that's normally like $750, and they're going to be doing it for $5. And you got to know that's the end of your business if you're the people doing that test today. So it is problematic. Another kind of political issue going through is the fantasy sports. Nevada regulators ruled on Thursday that playing daily fantasy sports should be considered gambling and not a game of skill, and ordered the websites like DraftKings and FanDuel to stop operating immediately until the state and the companies can receive gambling licenses. The only thing that's interesting on this is that the Supreme Court ruled that these are games of skill and not games of chance. I don't know if they're going to fight these temporarily, but I think this is really the first huge event. They tried online gambling with online poker, and of course, at that time, the leader of the Senate was Senator Reid from Nevada, and they were able to club all those online gambling sites into submission. This kind of smacks when only Nevada is doing this, as you want to just, another good Godfather metaphor, you want to just wet my beak a little bit, just give us a little taste here, just a little taste. But I think since he is no longer the leader of the Senate, he doesn't have the same juice as he had, or this company probably and the other would probably not be doing anything across the country. I think it does tell you, though, that these companies have gotten large enough to put a bite on the books in Nevada, and they're going to try to put a stop to it, at least somewhat. Kind of really tough to figure out how this plays out, but I was very interested how these companies were ever legal to begin with anyway, and there is a Supreme Court ruling out there that says game of skill opposed to chance. And why there's chance in anything, the idea is that the Supreme Court ruling is very specific. It means if it's only a game of chance, if the odds are already known before you go in. And the idea would be that if Nevada's ruling on this stood, literally buying options or buying a stock would be considered gambling. I wonder what they have to say about that. Because although it is a game of skill, there is some chance to it. But the Supreme Court ruling is if it's only a game of odds that are known before, and like options and futures and equities, we don't know what could come next week. So that's the element of chance. But at the same time, you can't just roll dice and know exactly what the odds are every time. And that's the difference. I thought it was interesting. We'll get back to a bunch of stocks here at the start of the bottom of the hour. Meantime, you can give me a call at 877-927-6648.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And we're back. One last news item. If you're thinking about playing Taco Bell, Taco Hell, and Yum brands, there is another wrinkle, and it looks like they've taken another step closer to splitting up. So I will probably put this on my do not trade list for a while. They got one of the activists on the board of directors, and effective today. And this is one of Carl Icahn's previous lieutenants in another company. But a lot of these guys are getting together, so there's probably going to be some push to spin off everything and get rid of what's in China. And this one may hold up a little bit better than the rest, so you might want to keep that in mind. Anyway, I just thought that would be something you should know. One last thing out here, if you are not a big fan of South Park like me, I know they're juvenile and disgusting and everything else. A lot of people probably would not want to watch it, but it's become the last program, or one of the few programs that can be politically incorrect. It has a lot to do with cartoon characters. They can do anything and don't get blamed. No one's running around saying that they shouldn't say this or that. Simpsons can get away with a lot. South Park probably more than anything. I just thought it was very interesting, and I think maybe the last nail in the coffin for Yelp. They got skewered Wednesday night about Yelp and people yelping. And it just made me think about when this thing came out and how much I hated it then. You could never get enough shares short on these to ever make it worth the while either. Everybody already knew this thing was a problem from up in the $70 range. Was it trading around 23 bucks now? But I think if you want to figure out that your tombstone's getting written, all you need to do is have somebody like South Park come along and show that your customers are not only narcissists, but total yucks, as this showed it. But not even the biggest problem, which is people getting sued over putting on false and misleading reviews on their site. And I'm looking at this one, almost ready to put it on my Walking Dead list as of today, after seeing that. But if you have a strong stomach and watch that episode, I think it replays on Comedy Central several days. You'll have to wait for the payoff in the very last few seconds of the show. But I've warned you, it is for adults only and those with a high tolerance for ribald humor. But, I look at Yelp as a public company, another one of these things that got rushed to market. Then I compare it to a company like Rotten Tomatoes that has done so well. The downside of Rotten Tomatoes is, of course, they're owned by a film studio already. I think it's Warner Brothers. So they're not completely out of it. But the idea of Yelp was they were going to be kind of like Rotten Tomatoes. But it truly ends up, if you've got a mom and pop store and you've got 5 reviews and somebody gives you 1 star, they can ruin your small business. Movies, there's enough people out there to actually make a difference, a big enough sample size. So those people, in fact, if I was king, I would find people that gave one of the bad scores to movies like Saving Private Ryan. Yes, if you go on Rotten Tomatoes, there are people that gave Saving Private Ryan a very bad score. Anyway, if I was king, it would be legal to beat those people with a shovel. There are some movies that are horrible that get good reviews, but I don't understand the idea of giving bad reviews to a movie like Private Ryan. I understand you don't like war movies. Then don't go see it. Don't review it. Anyway, just my 2 cents out there. But Yelp is no Rotten Tomatoes. It missed all the wonderful things that Rotten Tomatoes did. And I think, maybe you need to have 20 different reviews before you can show one. But certainly 1 or 2 reviews, the ability to have these people not named and not use the real names, and all the lawsuits that have come in. If this company drops below 20 bucks, I figure it's 10 bucks next, and maybe in 2 years, totally gone. Maybe someone buys them out and fixes what's wrong with them. But I don't see a lot of things that can help. And if we go back to the Godfather metaphor to begin with, this is the same company. Talk about a lack of ethics. This is the same kind of company that if you had a bad review on, would offer if you gave them a little bit of cash to get rid of it. Isn't that just the same kind of thing as a guy standing in front of your window going, be kind of tough if your window was broken overnight repeatedly? What would happen? Be a really bad thing. Maybe if you gave us some money to watch it, it wouldn't happen. Anyway, don't like the CEO, don't like the company. And if you watch this, I think you'll be so disgusted that you will not think of Yelp in the near future. Anyway, we had a lot of stuff going on out here. Just wanted to take a look at some stocks. I have not been a big fan of this last move of the energy market up, and thought we, bounced off 50. We're probably going back down to 43 on crude. I don't think that there's a whole lot else out there. Schlumberger, of course, came up here. We brought this up on the on air, I think, a week ago, of it testing its previous high. Didn't quite, it did go, it didn't quite get there. It was short by maybe 50 cents. on October 9th of testing its previous high at 17 million shares. With 12 million shares, it kind of went sideways. We're getting the truth out here today, and that is that things are not going to be any better anytime soon in the oil patch. But we'll have to see. Volume is picking up a little bit more. It's more of a price issue. I think you've got at least to come back down here and test this 68 level. You know, you got a nice test of it off the October 2nd level with light volume. But looking and reading the transcripts of the earnings call, boy, I think at best you're hoping this thing doesn't go any lower than 66 bucks again. At worst, this thing could see 50. If anything that they said in the earnings call was anywhere close to being true. Other stocks being punished today, Honeywell, and this is why I'm starting to think that next week could be a huge bloodbath. These are rather minor infractions so far of earnings. They've tried to hold this thing up into the morning, but the truth of the matter was the earnings call was also pretty bad. It got down to $55.33. This thing doesn't move a lot. It's one of these plays that everybody wants to have in their quote safe stocks. My guess is not safe either. This needs to probably get back to 87 bucks, which is the August 24th low. My guess is that, you know, we blew away that kind of volume today already. So that door is open to that gap around the 87 level and continuing down. GE did a little bit better than most people thought. A lot of this is financial engineering and selling companies. It's probably going to take, when I took a quick look at it this morning, probably going to take maybe another 2 quarters to figure out how the money coming in from all the stuff that they've been selling will affect stuff. They did break the previous high of April 10th, though. And, of course, you had 350 million shares. We're breaking through that today with 100 million shares. So not something you want to be looking at long term, I would suspect. Pretty good energy off the bottom. No surprise on that. But again, like I said, I think the earnings are really going to be skewed here for a while by all the stuff that they're selling and some of the way the cash is coming back in. I think a lot of people may be overestimating General Electric's turn into a a company of the 2000s instead of the 1900s or 2100s, I guess. Yeah, a lot of block trades yesterday on GE, but I think everybody knew that all the selling that they had was going to be able to. You got a lot of cash, you can make a lot of stuff look a lot different. You can move things around. That's what a good CFO does, is make sure everything looks rosy. And to me, it's tough to say that a lot of those sales still won't be making things look rosy into 6 months. After that, the question is, you know, is that cash exhausted? And will we see truly what GE is doing and their run rate? Of course, the previous CEO, TRW, what is it? TWTR. The previous CEO of Microsoft has come out and said that he's bought up to 4% of Twitter. Twitter had a nice little move out here today. Is it really a change of what's going on? You still have a question of what the current CEO of Twitter, Jack Dorsey, is going to do. Is he going to leave, go to his other IPO? Is he going to really stay? Is he going to be just the CEO of Twitter, just the CEO of Square? A lot of soap opera stuff. I don't know if there's a clear answer to this. Volume is a little higher out here today. All I got to say is that the previous CEO of Microsoft is the same guy that threw $8 billion at Skype when he probably could have made it for less than $500 million if he just wanted to make his own version of Skype. I don't think it's ever going to pay itself off. He, of course, also is the famous guy that wanted to buy Yahoo right before everything blew up, and only through a miracle was he not allowed to do that. He may have thrown another 16 or $20 billion away on Yahoo back in those days. And I don't know what else you can say about that other than dodged needle. So I don't know if it's a good thing or a bad thing. I think everybody's saying, well, at least there's 4% of the shares that are locked up for a while. But I don't know. I need to see something consistently different with the way Twitter does. We also talked last week about how I think Twitter's real power may not be in Twitter, but in Periscope. If anybody was watching the news down here in Tampa last week, I think it went national. Some moron girl that was like 25 got real drunk and started periscoping and basically live video of her driving around the streets of Tampa drunk, which is no big deal because as far as I can tell, after about 9 o'clock, that's probably half the people on the road. She was stupid enough, though, to record the whole thing to Periscope. I figured that she's going to jail for about 150 million years. Nothing like one after another stoplight and stop sign and everything else and running off the road to just rack it up. Kind of reminds me of a gas pump where the money just keeps running up. I can just see they're just sitting there going, how many can we decide her for 100 tickets? We could probably do 200 tickets. Do we have enough time to do all the stuff on 200 tickets? Anything from Facebook to Instagram to a lot of these new apps, especially young and stupid people will find stupid things to do with it. But as long as it's in the news, I think we're going to continue to see much more about it. Twitter is kind of the idea that I'm going to give you just a little dab of what I'm seeing or doing in a text form. Periscope, of course, is the idea that everybody is become, or everybody will become, news reporters when something big happens. But it's right up the line of what Twitter does. They could be kind of the CNN, and that is when a war breaks out and bombings start, you go to CNN to watch their world coverage. Other than that, you don't watch them. And boy, I would have to fire all of them after watching the Wednesday night debates. It's hard to see a news organization dip so low as they did. I felt dirty after watching, not the political people. They're bad enough, but just the patronizing, having a Spanish guy ask a Spanish question, the black guy ask the Black Lives Matter question. It's if you watch Family Guy a lot, they always have the same thing on it, and it just I'd laugh for a little while, and then I thought, how horribly pandering this is. And I'm not talking about the politicians, just the station itself. It was ridiculous. Anyway, what else do we have out there? Let's see what else we've got. Caterpillar. Awful little out here today. I was kind of keeping an eye on this one, on the idea that maybe this thing is starting to set up its ABC down. If you actually start looking at this in the expansion way, I think our last little move out here had kind of a retracement. D, this would be C. You know, just basically 70% retracement, and this thing is headed down. And ABC and Caterpillar, 1-to-1 would now take you to $58, almost $59. Take a look at that when we come back.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry, powered by the acclaimed with TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
And we're back. Tesla, little bounce out here. You'd think that they probably would have had a lot more yesterday after, of course, the idea that everybody woke up and had self-driving cars yesterday. Little bounce out of here. I just think it had to do with more about expiration. Energy, though, is fairly decent. Certainly looks to me like we may be setting up a small ABC down, or well, even a larger one. But the 195 low out here looks like it's going to get tested. But not a lot of energy in this one. It is up finally. And I guess maybe this is the first week that Elon Musk hasn't said something, or it's been 7 days since he has said something incredibly stupid. But he's been one to always Twitter something out come every expiration to drive a stock higher, or anytime it looks like it's going lower. He's out there to beat the drum. He's been one of the most effective stock manipulators for a while. The news yesterday, kind of interesting. Of course, last week he was slamming Apple and saying that only the hacks that he fired go to work at Apple. And of course, talking about nuking Mars, dropping nuclear bombs on the poles. It just seemed like somebody needed to get a hold of him for a little bit and tell him to shut up and start thinking about what he was saying. It just seemed the Apple thing was unseemly, and the Mars thing just seemed almost nutty to the Bond villain level of doing things. Besides the fact that technically it wouldn't work. It would just make a atmosphere of a huge cloud of chlorine that would kill everybody that went. So his idea is there's no atmosphere now, so we'll attack it with nuclear bombs. We'll have lots of water. Unfortunately, the atmosphere will be like the First World War when they were putting chemical weapons against each other through the over the trenches. But I don't know, kind of weird, but it is nice. We do have one stock moving on pretty much straight news, and that is United Continental. The CEO had a heart attack today. They don't know exactly what they're going to do. He hasn't been around that long. If I remember right, it's, what, a couple weeks or a month since they appointed him. It hadn't been that long, kind of vaguely remember it. Didn't have time to check it up. But if you're wondering why United Continental is dropping a little bit, it's all about the heart attack buzz. No, I think this is the new guy. Somebody in the den is asking, is this the CEO bribery guy? No, this is the brand new guy. He just had a heart attack. And I think it was, I don't know, I saw the chart, intraday chart, but I think you can see it when they announced it. The stock was basically within 2 cents of where it opened. It was going to go out at $58 today, and he did have a heart attack. So, you know, is he skipping school today, or do you have a real heart attack? Everything looked like he truly was having a heart attack. Maybe after he figured out there's something else going on, don't know. But yeah, he said this is the new guy that's only been around for a few weeks. So kind of interesting. Of course, getting somebody that quickly into it, and they don't know whether they're going to have to appoint another CEO. Looks like that news won't be coming till Monday. But if you are trading this or looking at it, that's the reason. In the next hour, we've got Steve Rhodes. I'll be back doing the Tech Insider Hour at 4 o'clock. But hang on for the very squeezably soft Mr. Rhodes himself. Or maybe less squeezably soft. I haven't seen him in a while. He may have lost huge amounts of weight. Maybe. Maybe not. Like him anyway. Mr. Rhodes, the Roadnator, is next. So when you can, not when you have to, we'll see you. If not at 4 o'clock, 2 o'clock, same bat channel, same bat time.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.